Absolutely. All right. Let me go ahead and break down some of the new things for you guys that you may have already not have been aware of. We'll go through the email really quickly. So some of you have already seen this, but we did add property photos to the product. It's already been live for a little bit, but we officially announced it. Property photos are on. You now have the ability to edit more of the data inside of Bright Investor. The icons for tracking information on tracking the different property updates is now live, including the new extended loan information. The estimated sales comp filter is officially live. Small things including the Bright reports. When you do generate a Bright report, it will save whatever analyzer you're looking at, so that whenever you show it to somebody, will be coming live. One of our users recently requested the individual owned filter. So when you're looking at properties and you toggle on the individual owned filter, what that will do is only search for properties that are not LLC owned. So it'll only look for people that are owned by an individual person. Now, on top of that, we've added the years built min and max filter to be able to filter by specific vintage of property. And now when you generate a Bright report, it will prompt you and ask you if you want to edit the share permissions before you generate the report. As a reminder, sharing permissions on Bright reports are how you turn on and off certain sections of the report, depending on what you want people to see or not. We then added the crime legend. So on the sidebar, when you look at crime data now, you will be able to see basically what pin colors mean what types of crime for easier understanding. We've added a couple more tool tips and the ability to do PDFs. So that's all live now. And what is coming out with our next improvement, I can also point out to you. We talked about the screen sizing last week as well. But the crowdsourced data for crimes is coming out very quickly. We are also adding in the ability to do QR codes. So you guys who are generating Bright Report, if you are using them for investor presentations, if you are using them for talking to other investors or clients, or you want to put that QR code anywhere, you will be able to take the Bright Report and generate a QR code for it. So you can put it on whenever you want. And that way, if anyone scans that QR code, it'll pull up the Bright Report on their phone. Just something that we thought of that we're going to be putting out for you guys. Tomorrow, all of the videos inside BrightInvestor, some of you guys have mentioned to us that the videos that we've recorded are outdated at this point with old versions, old buttons, old things of that nature. Tomorrow, we are re-recording all the new content, including new educational content. So when you guys are in BrightInvestor and you're in the bottom left-hand side of the screen and you have those videos that talk about different ways to find markets and analyze deals, I will be recording new case studies. So I will be going through as if you were an investor, a property manager, a real estate agent, or a lender. And I'll be recording long form videos talking about how someone like that would use BrightInvestor to the most of its ability. So if you're using BrightInvestor and you're wondering, how can I use this better? I'll have more content coming out to help you learn how to master it. Let's see here. Besides that, we have the calculators that are still coming out. A couple other pieces that are coming out as well. This is a big one. I'm going to tease this one for now. We are working on a list automator. So essentially, right now in BrightInvestor, if you have an Excel list of properties that you're looking at, you can upload that list to BrightInvestor and display the pins of those properties on the map to see where they are. But a lot of you have a different use case than that. And there are similar services that are out there that do something like this. But what we are doing is if you have a list of addresses, so like if you're doing driving for dollars or Chester's driving for dollars, or if you guys have a list of properties you pull off Zillow or something, you have a list of addresses, you will be able to upload that list of addresses, and then our system will go in and fill out all the property information about that property. So if you have 200 addresses, you upload them to BrightInvestor. We'll go through and we'll find the loan info, the owner info, the sales comps, the rent comps. Like we'll basically fulfill all the data for those properties for you by uploading a list. The idea is if you get a list somewhere, you'll be able to upload it and then start to filter through it inside of BrightInvestor. So we're completely redesigning that function to allow you guys to have that list automator. We are also working on two new data types. This is probably the only two data types we're going to be adding for a while because you guys know we purged a lot of them. We are adding a rent to price ratio and a rent to income ratio. So when you are looking at anywhere in the city, any market, you can click rent to price, and instantly there will be a percentage that comes up for every zip code in that city, telling you which zip code has the best rent to price ratio. So if you're looking to instantly buy in the area that has the most likelihood of cash flowing, you want the highest rent to price ratio, you'll be able to see that in seconds. The same for rent to income. You'll be able to see where are rents most affordable and least affordable, and then where are properties most and least likely to cash flow. So we'll be adding those two data types into the product as well. This is a couple of people have asked a lot about being able to find rent to price ratio and not having to basically go back and forth or do it manually. But besides that, it's all I'm willing to tease at that moment in time. You should expect another update from us probably in the next 10 to 14 days. Another new version coming out with a lot of these things as well. But I think that's everything is from the new version. So if there are any questions about what the new version details or anything about how that works, please go ahead, unmute yourself, let me know. But I am happy to answer questions and also shift on to talking about deal analysis, market research, BrightInvestor Diamond, whatever you guys have in your minds. I'm here to help.
Uh, I'll start really quick. In terms of since you brought up the uh, BrightInvestor Diamond, that was it 8 week long program for everybody who signs up for it. Could you kind of touch a little bit on? Um, it sounds like it's kind of almost like I guess a good way to kind of describe it is almost like a boot camp or an intensive, so to speak, like really much more concentrated. Is that kind of the gist of it?
That's exactly what I'm trying to do. So what I'm trying to do with BrightInvestor is Diamond specifically is over the last 2 years, we built this platform and it's really helped people who already know what they're doing or have the information. But to use the metaphor I've used a lot, right? The desert and the ocean. I'm still finding a decent amount of bright investors are, they're in the ocean, or they're in the desert, they're walking, they're trying to get out of this analysis paralysis phase. They're trying to either go from 0 to 1, 1 to 5, 5 to 10. They're trying to really get the support they need to grow, whatever that means for them. And Bright Investor Designment is designed to create a one-to-one situation where I specifically am working with just you for 8 weeks straight, plus an entire year after that of just continued support where it's like, I'm not going anywhere. So when there's a phone call, when there's, hey, I got this property, what do you think? Hey, I have this deal, what do you think? Hey, can we get on the phone, talk to this contractor? What do you think? I'm there for that. But it's designed to allow me to really focus on your specific use case, what you're trying to get out of real estate, and then focus on building your team when it comes to PMs, contractors, hard money lenders, title companies, everything you need there. Focus on getting you in the right asset, the right area, and allow me to kind of turbocharge you in the direction that you're trying to go with one-on-one support. That's what I'm really trying to do, on top of giving you a free t-shirt, because I just want you guys to have t-shirts. So that's what it's designed to be. Very much intensive, just me and you working towards your specific goals to get you where you need to go.
Nice. Okay. Very cool. Very cool.
Hey, Donato, how are you,
Yeah,
sir? Hey,
I'm good.
just quick question, because I missed some of this. Are you the new features that you have? Are they going to be on the is there going to be a video on that Elite video piece that you have on site?
Yeah, so I mentioned, sorry, before you got in here, tomorrow morning I am re-recording every single video in BrightInvestor. So every tutorial, every piece of content, everything is being re-recorded and updated, including content with the new features. So that will be being recorded tomorrow, and then we'll get that uploaded here probably the next week of all the new content going out. So
Okay,
seeing
cool.
it in action, and on top of just like here's what button works where, I'll be doing some case study work as well. So being able to do essentially talking about here's how someone would use this better to for more
Yeah,
training.
yeah, yeah, yeah. Of course, that
Absolutely.
when you put it in that context, it actually helps much better.
Absolutely. That's
Okay,
what I want to be able to do. Yeah. So like we'll be doing videos for lenders, for investors, for agents and property managers for that.
cool. Thank you.
Absolutely. Rich, got your question about Bright Investor's duration of 8 weeks versus 16 weeks. The default is so I do work with some people on the commercial real estate space, which is a 16-week program, which is different than what Bright Investor Diamond is. That's separate. When it comes to Bright Investor Diamond, I focus on getting it done in 8 weeks, but it's fluid. If we need to do 12 weeks or 16 weeks, it basically stretches depending on how we get through the content. But the goal here is to be able to make it where we're expediting through 8 weeks. And that's why we have on the additional 12 months of support after the initial 8 weeks. Again, this is not something where, this is just me doing this. So this isn't something where I have to say, we're not done by week 10. If you still need help after week 8, sorry, you're sorry out of luck. This is much more designed to be fluid around your dynamic. So I'm targeting it to be 8 weeks, but I have stretch goals of allowing for up to 16 weeks for the content, depending on people's availability and depending on what they need. All in all, I'm trying to make it as curtailed to that person as possible. Does that help answer your question?
Yes, it does.
Perfect. Also, love the whiteboard behind you. I got my whiteboard right here to the right of me. Got all my got all my notes right here.
That my whiteboard is houses I purchased, sold, or rent.
Is it
So
really?
yeah. So I like to look at it when I purchased it, when I sold it, and my profit at the end. It's encouraging. So
Perfect. I
I
love it.
hope they get another blank one.
There we go. That's what I like to see. Yeah, I've got mine right here. I've got my vision board. I got everything that
Yeah,
I like. I don't go
yeah.
anywhere without my whiteboard.
I'll show it to you on a one-on-one.
Perfect. That works great.
Good. I got a second
Hey,
one too, yeah.
perfect. That's what I like to hear. Awesome. Hey Joe, so you have a hand up for a question. How can I help, sir?
Yes, first of all, glad to see you again. I heard you were sick, so
Yes, I was. You can probably hear my voice is a little bit still weird, but thankfully I got over it. Not sure quite was it flu or cold or something, but I couldn't talk. Was pretty much just in bed. So glad to be on the other side of it now.
I'm glad to see you, man. First question, I heard about last time you said you wanna put a new app for, I'm a house investor. Well, I'm going to school learning to that. And the ARV, the area that you were talking about, that's the one you wanna put on a new app, or we have to go one-on-one with you? You were saying how that thing is gonna work.
So can you clarify that again? I didn't quite understand the
The
new
last,
app.
yeah, the last time you said you wanna put a class or app about the ARV area, like if I wanna buy a house,
Mhm.
you wanna tell about the price and everything for the investors. On the bottom of the part when you have like the rental property and then the resale, and you said
Okay.
you wanna build something for investors like the ARVs and
Oh,
much.
oh, 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 sorry, sorry, sorry. Okay. You mean like the calculators, the new calculators for the Burr and those
Yes,
convenient
yes,
components?
for the
Yeah.
investors.
Okay. Yeah. So what we have done is basically for the new calculators that I'm doing for Burr, co-living, seller finance, and house hack, and then also including a hard money function, we have built all those calculators out in spreadsheets and Excel models at this point. Now, the next stage is I'm going through and taking all those Excel models, which some of my Bright Investor Diamond members have been beta testing for me, and we're
Mhm.
translating them and hard coding them into the software. So as of right now, all BI Diamond members get access to the raw Excel file version of those calculators as they sit currently. And then eventually, once I have those hard coded, they'll be a part of Bright Investor intelligently. So what we can do is there's a way I can get you those raw files if you want to get a copy of those calculators as well. That's what we do.
Okay, thank you.
You got it. Yeah, we had some folks using the Burr calculator. We've been testing it out for a while. The goal is with the hard money component. Some of you guys are doing burrs or flips or buying rentals with your own cash. Some of you guys are doing it with traditional financing, and some of you are doing with hard money or private money. So the goal is there will be some kind of filter or a toggle where you can say, I'm going to fix and flip this property. And are you putting down traditional money or are you putting down private money? And if you click the private money button, then it'll change the boxes to say, okay, how many points are you doing? What's your term? What's your origination? To basically change how you're financing. So that's what we're trying to do, to allow you guys to model more types of financing on your deals.
There's also going to be a tab for if you pay cash and then
Yes,
refinance
yes.
out. Yeah.
Yep, if you're going to go all cash. That one's really relatively simple. We basically turn all the financing to zero. And then, of course, that drastically impacts your cash on cash return, right? If you do a at least pre-refi numbers. But yes, there'll be a way to look at it if it's all cash.
I always go by the net.
Okay,
What's my
that
net?
makes sense.
Because some people could have
Absolutely.
an ROI of like, 5 and not make a lot of money.
Yep,
And you can have a
absolutely.
higher number and make a lot of money.
Absolutely. Yeah. Being able to focus on the profits. And that's why with properties, like I mentioned before, my rule of thumb if I'm buying multifamily is I want to buy something at $65,000 per unit where gross rents are over $1,000. Because almost without fail, if you can find properties between $60,000 and $70,000 per unit where gross rents are over 1,000 per unit, if you have a 4-unit property, for example, you will net $1,000 a month after mortgage, taxes, insurance, after utilities, after vacancy, capex, and repairs. That's why I like that number. I'm looking for, if I'm buying a residential piece of property, I want my cash flow on a long-term rental to be a minimum of 1,000. So always looking at that net number, and that's kind of the formula that I found. It works from duplexes to triplexes to fours, all the way to more commercial inventory as well. That's really the prime situation to maximize it.
How hard is it to find properties in that price range?
Not terribly. So like I'm looking at two right now in St. Louis, for example, that are in that exact range. So it's a fourplex for $255,000. So $55,000 a door would be about 260. The in-place rents are around 700, and the pro forma rents are right around 950, 995. So we're right around that cuff. So I'm actually going to tour it this weekend, checking it out because it's right in that cusp of what I like to be able to see. Um, Other Midwestern markets, you are going to have more success in areas like Wisconsin, in areas like Ohio, Kansas, Missouri, not so much Iowa, not as much as Iowa. Sometimes in Illinois, if you can get past the landlord laws. But those Midwestern markets, especially in places around the Great Lakes, have a huge inventory of multifamily property that just sing. And you can find some stuff there that really meets that criteria, especially if you're willing to hold it for a period of time.
So when you go from a 4 unit to a 5 unit, the
Mhm.
financing is totally different.
Yes,
So
absolutely different.
so do they make like, 5 units or 6 units, or they jump to 10 or whatever?
They do make 5 or 6 units. Actually, one of the BrightInvestor Diamond members, Jason C, we were just working on a 6 unit in Chicago together. They are available. For those who aren't aware, anything over a 4 unit is considered a commercial property, at which point your financing does completely change and the valuation of the property completely changes, where we're no longer going off of residential comps, we're going off the NOI, cap rate, and purchase price formula. So depending on where you're at in the US, and that's part of why we use the asset type part of BrightInvestor to be able to showcase where that is. And I'll just show it to you while we're here, for
And you
example.
have a calculator for that too? For the
Yeah,
multi. Yeah.
let's go ahead and show this, for example. And then I see your Jason, I see your hand. I'll get to you in just 1 second, my man. Let me show this. So, like, for example, if I am in Wisconsin, as an example, and let's just say I want to be in, oh, I don't know, Milwaukee, right? We'll pick up Milwaukee. If we're in Milwaukee and you're looking for type of multifamily product, all you guys have to do is click asset type. When you click asset type, over here, you can search the city by the type of property you want to buy. So if you want 2 to 4 unit buildings, this is going to search the city of Milwaukee to find where the most 2 to 4 unit buildings are. So we'll let that search, let it run. The areas with the darkest green have the most 2 to 4 unit buildings. So in Milwaukee, if you want to buy multifamily, that's where you need to be going. Now, if you want, say, 5 to 9 unit buildings, right, and want to go on the commercial side, we just search for the 5 to 9s. And now we're going to find out where those properties are. In this case, it's down here and over here. So in this one zip code, there are 2,154 units of housing that are 5 to 9 unit buildings. So that's where we'd be looking to go. That's approximately, oh geez, could be uh 20, anywhere from 10 to 50 properties that make sense in that area. So we can find them. They are out there. And one of the easiest ways to figure out if the city you're in is going to be serving you for the long period of time is to just do asset type, total housing units. When you do that for any one of your cities, it's going to tell you how much of that type of property is here. For example, almost 25% of Milwaukee is 2, 3, and 4 unit buildings. You guys may recall that my rule of thumb is 10%. If you want a type of property, if it should be at least 10% of the market, so you have a good chance of getting that type of property. In this case, only about 6% of Milwaukee is 5 to 9 unit buildings. So we're going to have a harder time finding 5 to 9 unit buildings in across the entire city. Now we also know by doing this 5 to 9 unit building search that all of those 5 to 9 units, Rich, in your example, are down here. So all I have to do is search this one zip code specifically, then do asset type for just this zip code. And when I look at this, 5 to 9 unit buildings make up 12.5% of the market. So this zip code has more than 10% 5 to 9 unit buildings, making this a good area to focus. Does that make sense?
Mhm.
Perfect.
And then you would take that and then you go to the next step. Let's look at the crime. Let's look at the rent ratio. Let's look at the business
Absolutely.
in the area that's going to support it, right? So there's
Yep.
a whole almost
Absolutely.
like checklist to go through.
Absolutely. And that's what we try, but that's what the kind of point of BrightInvestor has become. Be able to say, okay, great. I know where the inventory is. How are home prices appreciating?
Right.
How are the rents appreciating here? So, like, if all the units in that 5 to 9 unit building are 2 bedroom, 1 bath, great. Well, those rents are up 50% in 3 years.
Wow.
50% in 3 years. Look at that.
So you could you
That's
could be at
amazing.
you could be at the top of the market too. So you got to be careful for that.
Absolutely. But we're looking at this, that is insane growth on rents for a 2 bedroom.
Hmm.
Now we look at the income in this area, right? Say, okay, is our incomes going up that fast? Absolutely. In fact, we saw that a 2 bedroom rent on average is $1,500 based on the current household income in this zip code. And we look at the 30% rule for affordability. People can afford $1,500 for rent. That is perfect. It is literally tit for tat right there on what people can afford and where rents are at right now. That's amazing sign. Then we go further and say, great, are people owning here or are they renting here? What's the demographic change? Very, very stable. Over 10 years or 12 years, it's been almost exactly the same proportions. Very, very stable renter population. Awesome. We look at our schools in this area. Average schools, above average, average, average. Some really good schools right in this kind of 4 block intersection. Great, including the Reagan College Prep High, which is a public school.
Hmm.
Amazing. Now, I'm like, great. Show me all my multifamily 5 unit properties in this area. There's 238 of them in this area. That's
Wow.
where we're starting. That's how we're doing this.
Okay, but now let's look at the prices of these. Is that one
Yeah,
$14 million?
that one. Yeah, this is a large apartment complex. This is going to be
Oh,
this is 216 units.
oh
If
yeah,
you want a
yeah.
200, you probably don't want a 216 unit
No, I
in this
don't.
case. Yeah. So then we filter by prices, number of units, all those things, right? And that's what we're looking for. So, but that's the process that if you want to find, does this area have what I want? That's how we'd be doing it with Bright Investor
What's the
before we
crime in
start
that
going to
area?
the,
Do you have a crime thing
yeah,
yet?
that's fine. Yeah, let's find out. We can check it out, see what's going on. And then I want to answer a couple questions that I know if a couple folks have. Let's see here. Not getting a ton of crime in the area. Let me load a couple more. Let's see what we got. I have an arson over here, so I want to take a crack at that. We have one arson, a couple years old. Okay. So crime data not as frequent here. So let's go ahead and let's check out some of our double checks here. So we know the schools are pretty decent here. You guys are gonna I want to go to my favorite hack for this and look at my franchises. Where are my Starbucks? Perfect. Where are my Targets? Where are my Chick-fil-A's? Where are my Trader Joe's? None. Where are my Whole Foods? None. Where are my Lululemons? None. Where are my Home Depots? Okay, this is what we're looking for. Anywhere we can have a concentration of high income focusing franchises. Starbucks, Chick-fil-A, all along this main road, this 43, looks like 43 North, going this direction. The fact that this is concentrated over here makes me more confident. I want to be owning kind of towards between this South 84th Street and this side of 36, because that's where we're seeing a lot of these types of properties make sense. Now, I'm going to go ahead and layer that with these businesses and take a look-see here and say, where are the restaurants? Okay. Where are the hospitals and medical centers? Take a look for those. Where are the grocery stores, cafes? Okay, we're starting to paint a picture. Clearly, this north-south section, this road right here, has a lot of businesses following it, going north-south. And over here, as we get more downtown towards the Milwaukee airport, it continues to increase. But the area that has a lot of our Starbucks and our other franchises and businesses is also similarly east of this South 84th Street and on the west side of this West Logan Road. That's making this section of real estate very attractive for us. So that's how I'd be using this to get a pretty good idea of street by street what makes sense.
It's not far from
And
the
then,
airport either.
and then you're not too far from the airport as either. And then I'm just going to walk around right here in the neighborhoods. Well, look
Oh,
at that.
that's nice.
4-car garage. That looks like a duplex. Yeah, look at that. There's her multifamily right here.
Holy shit.
There you go.
It's just that
Boom.
if it's for sale, we don't know.
Well, we can always call the owner. But like,
Yeah.
I swear, sometimes I scare myself how good I am. I mean, I don't know what I'm doing here. Come on. I mean, there's your multifamily right there. 4-car garage on that side, and on that side. If I go over here, I'm probably gonna find more garages.
So it's about an 8 unit then, probably.
Yeah, there's your 8 unit right there.
Yep.
There's another one right there. There's another one right there. This is 8 units central. Buy up the entire street, you'll have 40 units right here. You got nice trucks too, good cars.
One of the things I did notice that there was most of the crime on that east side of this
Yep.
area that you'd focused on. So this, also is, coupled with the good schools, definitely would be like a good investment area.
No, I don't need these. I don't need these. These I don't need now. Okay, all right. No, I'm good with these.
Beautiful. Yeah, that's it. So that's exactly what we're looking for.
Yeah,
inventory wise. That's how we do that.
You should be.
There you go.
All righty. I'll go ahead and answer some other questions as well here and see what I have. Who else had a hand
Hey,
raised?
Donato,
Jason.
just had a quick
Oh.
question.
Oh yeah, sorry. What's up?
On the you could always skip trace if you had the address. You could
Yeah.
skip trace, find the owner of this property, right? Through this
Correct.
tool. You just basically put the address right in.
Correct. Yes. You
Okay.
put the address in, and then we'll pull up the owner. Correct.
It would. Okay. All right. Got it.
Do you have
And-
in there
and
also?
My
Sorry.
other question is the crime.
Yep.
How often is that updated, and are you tracking trends on it as well?
Yeah, so when we originally launched BrightInvestor, we had a crime trend over time section. The data that we were getting was only updated on an annual basis. It wasn't quite as frequent as I wanted it to be, so we discontinued that portion of the crimes. For
Okay.
the other crime data, it's updated usually on a weekly basis, depending on where you're at in the US. So it's very often that if we're in February, we'll get February crime. It just depends on where we're at, how well that local city or municipality is playing ball with us.
Okay. All right. So, but it's fairly regular. I mean, even if it's
Yes,
every other
absolutely. We pull, and that's part of why we're doing the crime crowdsourcing improvement on our next push. To where
But-
even if it's not an official police report, if people are calling in a crime like, "Hey, I saw this guy, doing this thing," the goal is to be able to have even more updated crime and have it in more areas across the U.S. by having
Yeah.
this sort of crowdsource as well.
Yeah, I guess my question is in terms of if you're looking at an up and coming area, let's say, right? And this
Yep.
goes also for education, right? Um, it, and historically the area had, bad education and bad crime. Um, is there a way to see what the trend is going down, the inverse, right? Crime going down and education rating going up.
Directly as it sits, no. But what I would do to answer that is I would look at the rent growth, population growth, income growth, and I would look at population. Like I'd probably look at these one, two, three, four pieces of the
Mhm,
pie, and then
mhm.
rent to own to get that story together. Because
Okay.
if I see if appreciation is up, population is up, income is up, and there's an increase in the number of people who are owning property there in the rent to own ratio, and we're seeing that rents are continuing to climb, all of that tells me the area is growing,
Okay.
right?
All
All
right.
that has strong fundamentals.
Right. Gotcha.
Do you have eviction timeframes on these different areas?
I don't. I could probably find that out though. Maybe able to find out what that looks
Yeah.
like for eviction timeframes. It's all all depends state by state, but it might
Right.
be if there is a data source for it, I can probably find it and see what makes sense there. That's actually interesting. Putting in like an eviction, like what you can expect here from a landlord tenant
Right.
law kind of perspective, like average. That could be
Yeah.
interesting, actually. I'm
And,
gonna write that down.
Yeah, because if you're
and
where I am on Long Island, you're talking 6, 9 months maybe.
Landlord friendliness. Maybe I can do that. Maybe something where like you can do landlord friendliness data type where it'll tell you how friendly this area is based off of like, is it landlord friendly or not, eviction time lane estimates. So you can kind of get an idea of how freak friendly it is. But I'll look into
and
Yeah.
that.
one
This is
yeah, and one other thing along with that, in terms of like uh rental registration, like, is it, easy to do, like, just get an inspection and, basic things like, hey, the house is actually habitable and it's not falling down or anything like that, versus like, you get an initial inspection and, you know, you got to do, jump through all kinds of hoops, things like that. And then, if it, if and only if it's possible, a way to find out which jurisdictions will require certain utilities to be in the owner's name versus in the tenant's name.
Mhm.
That
Yeah,
would
depending
be
on, yeah,
huge.
that could be useful. Give me an idea. I'll take a look at what we can do. I'll see what we can figure out from a legal perspective on bringing in landlord friendliness. See if I can make happen.
Mhm.
Yeah.
Um, Let me go ahead and bob to Jason real quick. He's been waiting for a bit. Jason, how can I help my friend?
Hey, hi, how's it going?
Doing well.
Good, good. You gave a formula regarding your triplexes and fourplex and all that, as well as I guess up. What was that formula, or if you can break that down a little more? I just wanted to write that down. I only got part of it.
So basically value or purchase price of a commercial property is equal to the net operating income or NOI divided by the capitalization rate commonly referred to as the cap rate. That's how
Uh,
you determine the property's valuation. I put that in the chat. So
and and
that
then you
go
said
ahead.
that you broke it down. Like there was something like I can't remember exactly what you said. I probably have to go back to the recording, but you kind of broke it down a little more specifically. Like if it's always X, then it's going to be this.
Oh, sure. So my rule of thumb is that if you can buy a property for between 60 to $80,000 a door, my preference being $65,000 a door specifically, and gross rents post renovation can be over $1,000. then it's going to be a good deal
That's
almost every
gross
time.
rents. That's gross rents of all doors or per door?
Per door, gross rent per door. That's a great. I'm gonna put that in here. I will make that clearer. Gross rents per door.
Okay,
So in
so
this,
basically between 60 to 68, and you said you prefer between 60 to 65?
yeah, so it's between anything between like 60 and 80 grand per door, it can work. My preference is $65,000 per door. So if you can buy a property for $65,000 per door and that unit will rent for $1,000 per door, it's going to be a good deal almost every time.
Okay. And rent for $1,000, I'm sorry, is that gross or net?
That's gross.
Okay, gross. Okay. All right.
What's the correlation between the 1,000 and the 65,000?
So it's kind of a play up the 1% rule where people will tell you,
Oh,
hey, can
oh,
you buy?
okay, all right, yeah, okay.
Yeah,
I'm very familiar with the 1% rule.
yeah. So like, okay, someone says buy $100,000 property and they'll rent for 1,000, great deal. What I've seen is once you factor in your debt, insurance, taxes, property management fees, capex fees, repairs and maintenance, and vacancy, and you look at today's interest rates, you really want to be buying for 65,000. You want to buy a $65,000 house that rents for $1,000. That's what you want to be hitting to have a really good deal. So, like
So
for example,
it's really more like 2%, and then
it's yeah, basically it's getting closer to it. So, like for
right.
this, if it's so St. Louis, if I buy a 4 unit, sorry, my throat's still recovering. If I buy a 4 unit building, and the one that I bought, one I have right now, one of them I have right now, I bought for $270,000. That was about $67,000 a door, if I'm not mistaken. Yeah, about $67,000 a door. That property, I have gross rents as high as 1,300. That property, when fully rented out, cash flows almost $3,000 a month as a long-term rental. That makes a lot of sense. And even at today's interest rates, I'm looking at new acquisitions, the 7 to 8% interest range. Those properties at those numbers still net you over $1,000 a month. And so if I can find a property like that, my threshold for a property is I want it to cash flow me at least $1,000 a month for buying a residential piece of property. So especially if I'm doing 4 units. So those numbers are what correlate to that type of return that I've seen time and time again.
So I'm looking at a property right now. I have to find the address. Don't ask me the address, but but each door is grossing 850. All right.
Okay.
They what were they asking? They're asking six. What was it? I think it was a 660. And I think it's a 12 unit property.
660
Yeah.
and it's
I
12
think
unit property.
and it's a 12 unit property.
Yeah, that's gonna work. I can almost guarantee that's gonna work. You
That's
call
gonna
me.
work, you said, or not?
Yeah, I like that.
Yeah.
I like that a lot. You can reach out to me one on one. But that's the exact kind of thing I want you to target. Yes.
Okay.
At a yeah, at a high level, granted, there's a lot of questions I have to ask you about making sure you put a good offer in on that.
Yeah,
Um,
yeah. And
my,
that's just a real quick back of the napkin type of a look at it. I understand.
yeah, but back of the napkin, I like where that's going. You can always email me and we can talk. Um,
Okay.
but that's yeah, that's exactly what I want to do in diamond sessions like that. But yeah, that if you're starting there, we're in a good place.
All right. Great. Yeah. Well, I think that would be I think they're around 8 right now, so there's room to grow.
Yep,
There's definitely some work that needs to be done in each property, but not too much. I'd say maybe I don't know, just looking at it real quick, maybe like I don't know, 2,000 a door or something like that.
that's nothing. That's
Yeah,
nothing. Yeah.
yeah.
Okay. Yeah,
What
that's
were,
nothing.
what were those numbers again? You said you got it at 650, and you're the
It's 660. That's what they're
six,
asking.
right?
I believe, like I had to go back and look at it, but I think it's 12 doors. When it's at the top right now, each one is being rented at various prices that are like 800.
Mhm.
Uh, there's a 750, but in that area, the rents are roughly about 850.
Okay.
That works. That works. Because especially because your price per door is getting down to 55,000 per door. That makes sense. Now,
Because
there's a lot of yeah. Yeah.
I was thinking it's a little high. I was thinking like they were off probably about 60,000. Maybe a little more, but I wanted to see and break it down a little more before I actually decide to pull the trigger.
If you these are some of the questions I'd ask if in a session talking about it. I need all of their income. I need all of their expenses. I need to basically see what the cap rate is in the market, which I can pull for you. I would need to see. I want to know if they have their current insurance carriers willing to carry the policy over, and I need to go get a debt quote because a commercial property is not going to put 20% down. They're probably going to require you to put 30% down.
Yeah, that's another thing. I was also looking at um, doing it another way where, yeah, they're going to require at least 25, 35%, maybe
Yeah,
even 40 depending. But yeah, yeah, we'll talk some
let's
more.
yeah, we'll talk some more. That at high level, that sounds like a pretty decent deal. There's the conversation to be had there. Some negotiation can go on. I like it.
If you did the 1% rule based on that, what you said, 850 times 12, that's 10,200. And if it's 660, it's basically 1.5%,
Yeah,
Yeah.
right?
absolutely. That's solid. That's the kind of thing where for everyone here who's putting in the work like you guys are to make these things happen, that's the kind of return I want for you. That's the margin that I think you guys deserve. And so that's what I'm going to recommend that we kind of deals that we pursue. Because it just if I can get you guys to cash flow $1,000, $2,000 a month as long-term rentals in this environment with interest rate, I know the exit strategy for higher rent growth for midterm or short term to be able to burn out longer term and refi is all there. And that's what I'm trying to do, maximize exit strategies for all these different properties. So just send me an email and we can talk.
Will do. Thank you.
Perfect. Absolutely. I have some questions from Roy, Kate, and then Chester. So Roy, I saw you've had your hand up for a second, so go ahead and unmute yourself and we'll see if I can help.
Yeah, hi. So I'm a relatively new investor, okay, and I'm looking
Welcome.
to. Oh, sorry. So I'm looking to get into exactly this, right? Like purchasing my first multifam. And question I have, how are you guys securing the financing for these kind I keep thinking traditional, and I know you can do hard money and stuff, but I mean, I would like to do, especially since I live in California. So if I would be doing this purchase, it would be somewhere in the
Destiny.
Midwest, like, some of
Yep.
these properties you guys are looking at. How do I go about getting like pre-qualified or get ready so that when I find something, I can move on it quickly? How do you guys do that, I guess?
So, couple different options here. So, the first and foremost, let me ask, have you owned any property yet, or was it your first property ever?
I mean, I own my own personal property, yes. My
Okay,
own home,
but this
yeah.
would be your first investment property.
Correct.
Okay, so there are a couple of different options here in the conventional route, right? In the conventional route for multifamily, um, it is a little bit different in the sense that you can do floating rate debt, bridge debt versus long-term conventional. You hear a lot of people who will swear up and down never touch bridge debt. I'm generally one of those people. Bridge just means that it's floating rate, same thing as an ARM or adjustable rate mortgage. So you can do the same thing similarly in the residential space, but in the commercial space, instead of having programs where you can put as little as 3 or 5 or 10% down, the commercial real estate rule requires you to generally put between that Jason was saying, 25 to 35% down. Generally, oh, sorry, Eric, go ahead.
I didn't say anything.
Oh, sorry. Okay. In addition to that, depending on the size of the loan you're trying to do, sometimes they require to have not only a net worth signature, but also an experience signature. So, like, I'm working on a 200 unit building in San Antonio that's $23 million. That kind of deal, we have to have someone that partners with us that has the net worth and the experience, meaning the bank knows they know what they're doing to be able to lend us that money. When it comes to smaller commercial projects like this, generally speaking, there's going to be a net worth or a liquidity requirement, but not necessarily an experience one because the downside is kind of hedged against the size of the property. But in short, there are still credit unions and other types of small commercial lenders that do these types of projects that we get you qualified for. Some of them are going to be much more relaxed with their loans. Some of them are going to be a lot more stringent with their loans, depending on if you do a Fannie Mae or Freddie Mac agency-backed situation, or whether they're going to hold that loan inside and they get a bit more creative with it. So,
Got it.
long story short, to answer the question, we'd have to connect you with a regional commercial multifamily lender that specifically works with investors and is open to open to long-term conventional financing to newer investors that may require you to bring in a liquidity partner to show that you have the balance or net worth to guarantee the loan.
Okay. And then one last question. Are you vetting usually? Because I imagine you don't live in most of the places you own, so as well as the other folks here. Are you vetting the local property managers, or
Oh yeah,
yeah, okay. And
absolutely.
we can't do, can we do it through the program here, or is this mainly calling around like, local and just calling and getting meetings with people and you know what I mean? Like,
Yeah,
that's how I would do it here. I would just meet with a bunch of different property managers and kind of get my vibe from, and plus the way they work and everything from them directly. But long distance,
absolutely.
I've never done something like that. So,
Yeah, so actually, it's funny. I have a couple of BI Diamond members that were doing this. So with what I prefer and what I do with everyone that's in that program is we get on the phone, we call PMs together. So we'll use BrightInvestor to find the type of properties that we want to buy. Then we will go and see who the current listing brokers are for those properties, who they were in the past. And then we double down on looking at who the major brokers are trading the kind of product that we want to buy. Then we speak with them, get that deal flow coming from them for pre-market inventory, and get introductions to their recommendations for PMs. Then I have a huge list of questions that I know specifically to ask for multifamily property managers that I like to vet those people for you. So, I mean, generally, like Sarah, we're here, should tell you, we hop on the phone, we just ask the questions together, we kind of grill them together. And we do the same thing for general contractors in that area. So that ideally we end up with you having broker, contractor, property management, lender ready to go. So that when you find a property that makes sense, we underwrite it together, you have the financing coming into play, property managers ready to go. And if you need to do any kind of renovation, we have the contractors in place to do it as well. But all of that we build organically, kind of using what we see from BA.
understood. Thank you.
Yeah, you got it. Go ahead over to Kate. Also, this is like the biggest session we've had in a little bit. I'm pretty kind of flattered right now. Pretty happy about this. Everyone coming and asking questions. So thank you for being here. Um, Kate, how do you handle tenant interactions in multi-unit properties? I have two duplexes that I self-manage. Tenants are always calling, complaining about the other tenant. Hire PM. I can see why you think that. A PM will only block the fact that they're texting you. It will not solve the problem. So the first question that I'm going to ask is it worth 10% per month to have someone get the text before you do? When in reality, what that PM is going to do if they can't solve the problem, which likely they can't, is then text you saying, hey, the tenants are mad at each other. What do you want me to do? 10% of your gross monthly rent for that problem, I think, is too much. What we want to understand here is, because I had this situation before previously, what is the core issue of the actual dilemma? Is it a loudness issue? Is it a cleanliness issue? Is it a personal vendetta? What I have seen people do before is implement, if it's a loudness issue, quiet hours. Implementing quiet hours at the property and then buying decibel measuring devices. They do them for humidity for basements. They do them for glass. You can actually buy sensors that will sound an alarm if they hear glass breaking. And I've seen some people do decibel measurements. So what they do is they say, hello, for each of you, we have these decibel measures that we're going to put in here. Quiet hours are now from 9 p.m. to X, and each of you have one of these. If your sensor goes off, we'll know that this unit was the one that was causing noise. If you have more than, say, 5 infractions, your lease is broken. We're going to have to ask you to leave. It provides a very clear set cut rules of, look, this is what you guys are agreeing to in order to appease both parties. Here's the addendum. That's one option. But the core of it, we want to figure out what they're really having an issue with. And at that point, I can address it more frequently. But I wouldn't advise just getting a PM if we don't know what the problem is, or if the goal is just to have them not texting you, because eventually the PM is just going to call you and say, "Hey, these guys aren't getting along. Do you want me to evict one?" And then you're going to have to just make a decision. Does that help at all, Kate? I don't know if you're still here.
Yeah, thanks, Donato. Yeah, the issue is, first of all, they're all low income tenants. So,
Okay.
we're kind of locked into a 1 year lease
Okay.
through different agencies. And like in one of the duplexes, you know, this they're always complaining about each other. One of them calls the upstairs unit white trash. The other upstairs unit calls the other guy something else. I don't know. They talk about, I mean, they're just like always narking on each other. Like there's too many cars going up and down the driveway. And, so I got involved in that. Like, what's going on here? And I mean, it's just, you don't know, not being there, who's telling the truth, or they both
Yep.
lie, but it's just the constant. And so finally, they were complaining so much about one another. I said, if it's really bothering you, just flip and call the police. And so I haven't heard from them since on that one unit. And then the other
Okay.
unit, the two women are always arguing over each other. Like I try to be nice to her and she doesn't give me any respect and blah, blah, blah. It's just this,
Yeah.
just bullshit stuff.
Yes. Um, First off, I want to say I understand, and that is the plight of being a landlord. So I respect you for going through this and handling it the way you have so far. The reality with being a landlord is you end up being treated like a guidance counselor and a parent. Like, Tommy won't give me
Exactly.
my toy back. Go,
Right.
why,
That's what I feel like.
absolutely. And it's just the worst. And it's true. I've had that many, many times before. The police one definitely is a solid option where you put that in, because what you're doing is you're making them escalate if it's that important to them.
Right.
You're not their babysitter, right? You are the person who owns the property. You're not responsible for the interdynamics of their relationship. So putting the police as a option, like, hey, if you think this warrants the police getting involved, great. Now, the fact that you haven't heard from them, great, because most people don't want to be involved with the police. It's just same thing people say, let me get my lawyer involved. People don't want lawyers involved. People don't want police involved. So that makes sense to me. If you want to have any data, like if you at one point you say, you know what, it's not worth it to have one of you guys here, security cameras overlooking the driveway, security cameras and decibel markers there are a great way just for you to get evidence in your back pocket. And you can have them sign addendums as well to say, hey, if these infractions occur, one of you is gone, and putting a consequence back on it. Because that's what you did with the police is, hey, there's now a consequence to you guys bickering here. One of you is going to have a run in with the law enforcement, and wherever that goes, who knows? So I would encourage an additional piece of information if it comes up again of outlining consequences for the continued disagreements. That if it involves you, there's going to be a punishment.
Yeah, the one
Um,
where they really don't get along, one at the front did install cameras on the driveway, and then that
yep.
really set off the upper tenant. So I mean, yeah,
Did they
yeah,
get
I
your
guess it is what
permission
it is. I
before
mean, we
installing
started,
those?
what's that?
Did they get your permission before installing those cameras?
Nope.
Hmm. Okay.
And we started with just a single family, and then we thought, oh my gosh, we can make so much more money with these duplexes.
Yep.
And now we realize, I guess, what comes along with multifamily units.
Well, I would caution you there and say, I think the price point and the class of tenant you take on drastically differences your experience. Just a fact.
Exactly. We're coming to
It's
that conclusion.
it's one of the reasons where, it's just a fact where I look at properties, and if the gross rents are underneath like $800 per unit, usually not worth it. Yeah, I talked about ROI, return on investment.
Right.
That's ROE, return on energy. If
Hmm.
your gross rents per unit are too low, you will attract folks out of necessity. You will attract folks who can't qualify for higher income tenant apartments. And whether it's popular or not, they're generally harder tenants to work with, generally
That's
speaking.
what
Not
we're finding
always,
out.
but they can
Yeah.
be. So if it's any way possible to do some type of light renovation or cosmetic improvements or just change your marketing to attract a higher income type of tenant, you'll whenever you do have a vacancy, it'll take you longer to fill it. But when you do, you'll have a world of difference in the type of person you're dealing with and your return on energy over time.
Got it. Okay. Thanks so much. Appreciate it.
Absolutely. Happy to help. Chester, your question, is there a way to add a rough back of the napkin calculator for this rule of thumb? 65K gross 1K rent per unit. Way to add a rough back of the napkin calculator. Possibly. I don't know. Let me see. I maybe putting something in the calculator where it's just like Donato approved, like a thumbs up sign. If it meets the if it meets the that rule of thumb, I'll look at that. It's actually a pretty good idea.
Yeah, and then
Um,
one other quick question about the IRR. I know that was something, oh goodness, maybe a few weeks ago we kind of barely touched on. And I know that, again, that's more like advanced level whatnot. Do you think that there may be potentially and when I say light version of it, like something where this may require a little bit of discussion. So, you and I can kind of touch base offline so we can, streamline it to the point where it's like, hey, here's what it is, here's what it does. And then, maybe potentially a video on it, as part of the video
sure.
series. But, maybe just something where it's kind of like providing a little bit of uh, more in-depth analysis, but again, not going, quote unquote, super deep into the weeds.
Yeah, I can take a look at that. We can see what we can do. Yeah, we can. You can shoot me an email. We can, brainstorm on that a little bit more. See if it makes sense.
Okay. Yeah,
Absolutely.
that was something I was thinking about. But yeah.
Yeah,
Okay. Yeah, I'll definitely send.
perfect. Eric, when you share the recording, I will get these recordings up to the team today. We'll probably have them out by the end of the weekend for this one in last week's session.
All right,
We'll
cool.
have that out probably in 48 hours for you.
Thanks.
You got it. Richard, do you need a sponsor on the small multifamily properties? Not necessarily a sponsor on small multifamily properties. Depends on honestly the size of the property. It depends on the bank you're going with. But once you start getting like 50 units or more, generally you need a sponsor because the net worth requirement becomes high enough. Otherwise, joint ventures or being able to, or it depends on your current liquidity. I don't like this saying it depends, but it kind of depends. But on a small multifamily, like 5 to 9 unit building, no, you don't need a sponsor. Rich, do you stagger the leases? You can. Oh, you guys talked about that. Yeah. Yep. Staggering leases is great. Absolutely. Don, when you're sending a link to a property, can the client check out all the metrics? Also, can they start using the report to do their own search? Whenever you send a link to a property, the client can do all their own research. So, for example, if I go to my list and report section in BrightInvestor and I open up any one of these reports, gonna load it for a second. Anytime you send a report to a client, they basically have full control to do whatever they want with it. So if they send them this link, they're on their computer, they're on their phone, they open this up, of course, it'll have your colors and branding, but they can interact with every sale comp. They can turn on sales comps they like, turn off ones they don't. They can actually edit the property information. They can see the Zillow listing for any comp if they want to. For example, 390, right? And here's one that sold for 390. They can basically check out every comp. They can see they can see the Zillow listing for every rental comp and toggle those on and off. Then they can click on any of these calculators and run their own numbers directly from the report. It's all completely interactive. So they can change anything on here. Then they can move these around if they want to. And then there'll be your branding down at the bottom. And if you've uploaded your email into BrightInvestor and you send it to a client and they want to know more about this property you sent them, they can just click inquire about this report and it will send an email from them to you saying, hey, I'm interested in this property. So yes, they have ability to basically search and manipulate the information that's on here based off their analysis. What they can't do is go into BrightInvestor and start doing their own search for property. You have control over that.
So they can't change the property address.
Correct. Yes.
Okay. Okay.
Yeah. So all of this
And
stuff up here is locked in.
where was I was reading something in regards to if there is a metric that I don't want them to be looking at, that I can turn it off. Do they
Yes.
have access? Excuse me, have access to it?
Correct. So when you're in the listen report section and have all your reports right here, we have this little settings icon. When you click this settings icon, you can turn on or turn off any section of the report you don't want them to have. And all that does is just basically blur it out and take it out. They can no longer see it.
I see.
So you can do that for whatever piece you want.
Excellent.
All right, here. See, any other questions that I have? I think I did it. I think I nailed it. Okay, awesome.
One. How long does it
Oh,
take
yeah.
to learn all these little buttons and everything else on this thing? I mean, you fly
How
through
much?
it, obviously.
How long does it take? What?
For us to learn all these little buttons and these tricks, is there a educational portion where we learn that?
Yes. So that's part of what I'm doing tomorrow. So whenever you guys join BrightInvestor, right, we have the onboarding. So this gives you a quick 3-minute overview of what the platform does, and then we have 4 long-form videos explaining everything that we do and how we do it. Then on top of that, when you're in this chat system, we have a bunch of more videos here that are just ready to go at any time you need them. Plus, we have our live one-on-one chat where you can just message us and ask questions. So part of what I'm doing tomorrow is because we've made so many upgrades to the platform, I am re-recording every single video in BrightInvestor and upgrading it to reflect the most updated version of the platform. And so on top of the videos on click this to do this or click this to do that, I'll also be including context videos. So basically like a video saying, so you're an investor, how to use BrightInvestor, and I'll walk you through different case studies on how someone in different positions would want to use this platform. And then of course we have these office hours twice a week. And then of course there's BrightInvestor Diamond, which is even more. So we got lots of support.
Thank you.
You got it.
Yeah, and we'll be able to get the new videos through this little module that you have that you just pulled up, right?
Yes. And so what I want to do is I'm going to email out all those videos, but they will also be here as well. So we'll get videos out for everyone, ideally, so you guys can, because honestly, it's been too long since we've updated them, and with a new version coming out every 2 weeks, we just keep having to redo them because we're just updating so much all the freaking time. But yes, so we'll get those, make sure everybody can see it.
All right, cool.
Absolutely. All right, guys. Thank you so much for being here today. I really appreciate the turnout. For those who are interested in talking with me one-on-one or learning more about how to work together one-on-one, I did put that link in the chat. Again, it's just BI Diamond. Besides that, I will get these videos up this week. If you have any questions, shoot me an email. And you should expect our next version in the next week or 2 as well, with some more upgrades coming out. Besides that, hope you guys have a great rest of your weekend, and we'll talk soon.
Thanks.
Thanks, Donato. Thanks, everybody.
Thank you.
Absolutely.